Hello, very warm welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal and joining me today is Ankita. As markets clearly shrugged off the weakness towards the closing, opened near 22,100 with soft global cues, trading in a range of 150 odd points. Bank Nifty also traded in a 400 odd points, between the range of 400 odd points. But a good pullback was seen around 1 p.m. And that's what the rising support looks like, nearing 22,100 as the call writers indicate, and now 22,300 looks like in resistance. Which were the winning sectors today? IT, clearly IT Pack was the winning sector. PSU banks came back. Auto stocks were surging ahead of the monthly numbers. And of course, let's catch up the top stories now. Top story being the Paytm story. Of course, Vijay Shekhar Sharma resigned from the board of Paytm Payments Bank. And of course, the board has appointed independent directors also, but the Paytm is likely to partner with 4 Indian banks also. What you have, Ankita?
That's correct. Besides that, a lot of stocks that saw some movement on the back of a lot of brokerage notes coming in today as well. In fact, we saw TCS give good gains. It was up more than 2% today, and this was coming on the back of the fact that UBS has given it an upgrade, and they have also upgraded the target price as well as the EPS estimates to 9% from 3% earlier on. We saw Dixon Tech. We also saw Whirlpool that were knocked down in trade on the back of a brokerage note by Jefferies that was downgrading the electricals. We saw havells also move today because it was on the back of a brokerage note that came in that had upgraded the stock to buy and also hiked the target price for it. Goldman Sachs has upgraded the stock. But a couple of primary market rush also that we saw today. We saw, Exicom Systems that which is into electrical vehicle charging, has fixed a price band for 135 rupees to 142 rupees per share. That opened up for subscription in the markets today. And also Platinum Industries, which is into manufacturing PVC and CPVC, that has also opened up for subscription today, and they have fixed the price band from 162 to 171 rupees per share. So that was the roundup of markets today. But we are also joined by Kunal today on Technicals. Kunal, hi, welcome. Kunal, tell us, we are just 2 days away from the February series expiry. Any big moves that you're seeing, or and how's the rollover and how's the series looking for you?
So good afternoon. My sense is that this has been a very critical series for the index, because the January series, as it is, was a bit of a volatile and all over the place series for both the Nifty and the Bank Nifty. There has been good recovery for the index so far in the last few days, especially for the Nifty from that 21,700 levels, which is now acting as a good base for the Nifty. But I think over the near term, we are also seeing a lot of volatility coming by and divergence in terms of sector trends. For example, you're seeing the private sector stocks, private sector banking names, etc., showing signs of outperformance. There is a clear profit booking or a wave of underperformance which is creeped back again into the PSU names. So that's one pocket where traders are finding it a lot more tricky to try and create fresh long positions, because the index and most of the stocks are seeing a lot of volatility, and net the price action for many of these stocks on the downside. So I think the market internals are a lot more choppier this time around as compared to the market internals maybe in the last couple of months prior to that. So I think that's where the index trends are a lot more tricky this time around. And as it is on the Nifty front, we are not seeing any major kind of a breakout or a breakdown signal. So the Nifty is still trading about the key support levels, as I mentioned. 21,700 is a key short-term support for the index, and on the upside, 22,200 to 50 still seems to be a minor resistance at play.
All right, Kunal, what seems to be appearing here is like there is a bullish undertone, but of course volatility at its play. And of course, let's not forget this is a monthly expiry week also. And the same day we have MSCI rebalancing also. What are the trades that you're looking at this moment?
Well, yeah, absolutely. So I think in that aspect would suggest a couple of buy calls, but we'll specifically stick towards few mid-cap names. CESC is one of the stocks which I would highlight at current levels of 130 approximately. Looks attractive for a target of 138. The stock completing a classic bullish pennant formation on the charts on the daily time frame. Stop loss for this trade could be kept at 127. And KEC International is the other stock which has confirmed a swing breakout just around that 700 mark. So looks very attractive for a quick 5% to 6% on the upside. 740 as a target. Stop loss to be kept at 680.
All right, Kunal, we'll let you go on that note. Thank you so much for joining us.